Housing crash. That is the topic for today. Are we going to experience one in the near future? What is the definition of the housing crash? We're going to talk about what happened in the past, because I've heard a lot of people talking about this and kind of asking my opinion what's going to happen with house prices in the US. Hello, I'm Robert Niazov, your trusted mortgage source from R&J Capital Group. So let's start with pretty much a definition. When do economists say that, now the housing, crashed? Basically, there isn't a one formula, but the general rule that it's 20% decline in prices from the peak. In other words, let's say the house prices were, median house prices in a certain neighborhood were $400,000 at the peak. Now they will be 320 or less. I just took out the 20%. Now the economists think that the housing crashed, but it's not the only factor. It looks like the number of homes sold previously and at this point. If there's super stagnation in the housing movement, houses are not selling, people have no interest in this, people cannot afford them. That is also a sign of the housing crash. For example, it could be kind of made by the forces of the economy. We can remember what happened in Detroit when, Detroit is known for like the capital of US automotive production. All the big companies were there, like General Motors, Ford, Chrysler back then. So when the interest in the United States cars went down, when United States started importing cars from Japan and other countries, obviously they did not need to make so many cars. They were closing their factories. People started moving out of there. Why? Because they didn't have jobs. The housing experienced big crash, but that was pretty much localized. So that might happen anywhere in the world, and anywhere in the in the developed world, especially when the big companies that employ a lot of people choose to relocate or their business goes down. Now people are moving out because they need jobs. Obviously they don't need homes. There's less interest. It all comes back to what I always talk about, the law of supply and demand. Now there's a lot of homes and not enough people to buy them, so prices go down and they experience a crash. When the economy in general slides, like we had in 2008-2010 financial crisis, that was a major decline in housing activity. People weren't buying homes because they couldn't. They were lucky enough to put food on their table, not to even talk about what they can buy. Not everyone. There were still people that were able to buy it. Obviously, there will always be. There will always be, people that consider that an opportunity. We'll talk about this separately. But the majority of people, the first-time home buyers, or people that were really saving to buy a home, even if they had a little bit of savings, they were afraid. What's going to happen to my job? What's going to happen to the economy? That sentiment prevented people, in addition to the fact that they had less money on their hands, that sentiment prevented them from entering the housing market. So that whole thing, the general decline in the economy, also brought with it big housing crash in 2008-2010. I do want to go back and say that in some parts of the United States, we might experience a housing boom, and at the same time, at the other place, we can experience a real deficit in buyers, and the house prices might be going down. Not necessarily a crash, but it may get there if it gets severe. For example, policies. If the government says, okay, to buying a home, you have to pay this tax, that tax, plus the property taxes are high, there will be no interest in from the general public to invest their money or invest the time of their family there and move. So those policies, the local policies, sometimes on a state level policies, can generally dictate the availability and the buying power of the consumer. What to expect in the market, in the housing market in the United States in the near future? So one big factor, if you look at the states like Florida and Texas, even though people love them, they have, it's most of the time great weather, great policies of the government of those states. There is a problem right now with insurance. The insurance cost is very high. So a lot of people are thinking twice. Yes, we love it here, but can we really afford it? And so are investors. They're thinking, okay, I want to buy that home. I want to, I'd like to rent it for X amount of dollars, and we know how much the market rent will be. But the insurance was, let's just say, $2,000 for the house like this 3 years ago. Now it could be $10,000. The cost of insurance is very high because of natural disasters and the anticipation of natural disasters. So going back to my question, we might see that, again, pockets of the United States will continue experiencing the housing shortage, and the prices may stay the same or go up. And then there are other markets where inventory is building very rapidly. Again, Florida and Texas are, just two of those examples where prices will start moderating, going down. I do not still think it's going to be a crash because the population of United States is increasing, mostly due of immigration. If there is a reversal, in that policy, if the border security, border control, and I hope that's going to happen, is intact, and we will also have a lot less of legal immigration. Because remember, the birth rate in the United States is not that high anymore. Just talking about this, as you know, for a developed country, the birth rate per woman should be 2.1 to 2.2 child, to sustain the economic growth. In the United States, it's below 2 and severely below 2. Not as bad as some other countries. It's about 1.6. So the growth, the population, natural population, organic population growth is down. If the immigration can replace that gap, we'll still be okay. If not, then we'll live to see. Obviously, there's many factors, but do I anticipate the crash? No. Do I anticipate that some places like, again, Florida, Texas, maybe even parts of Colorado may reduce the general price for a home, the median price for a home will go down? Yes, that might happen. Next question was on this topic was actually asked by one of my past clients. They're basically saying, look, we want to know what to do to prevent ourselves from this crashes, potential crashes, or should we invest in the anticipation that prices will go up? Nobody knows. However, this we know, that over time, long term, both prices for homes and rents go up. So long term, we know this. So if you're buying a home for a long term, or you'd like to become a homeowner for a long term, you're not looking to resell it in the next few years, in my opinion, you cannot go wrong. And think about this. So, people don't really kind of think about this, and they say, well, you know what if prices go down? What do I do? And then I need to move to a different place. So let me give you this example. I'm actually going to break it down for you. You buy your home, let's say for $500,000. You start living there. 5 years later, let's say you want to upgrade. You want to go to a bigger home. But generally, in 5 years, let's just say everything on the market went down by 10%. So you're forced to sell your home only for $450,000. Okay? You're forced to sell your home for $450,000 because that's 10% less than what you buy. 10% of 500, what you paid is $50,000. 500 minus $50,000 is $450,000. That's how much you sell the house for. So you lost. However, if you're upgrading and you want to buy that home that used to be 1 million, by the same token, if it went down by 10%, now you buy a home for 900,000, you're actually ahead. On the down market, if you want to upgrade, you actually do well. It's an individual choice. If you have more questions, again, please comment. We'll be happy to discuss it. You can also contact us directly. Our information is provided on the bottom of this video. And as always, God bless you, and please stay in touch. Recommend content for our next video.